Let me ask you something. When you see a strong bearish impulse and then price starts moving upward, what do you actually see? A pullback? Or could you be looking at the very beginning of something that you haven't recognized yet? Because here's the interesting part. Both interpretations can be correct. And if you understand why, you may start looking at the market very differently. Before we go deeper, if you're interested in seeing trading from a perspective that I rarely see explained, even by many professional traders, consider subscribing to Bias Positive Digital Rise. Because what I'm about to explain is not another trading theory. It's a way of thinking about how we can actually simplify something that looks incredibly complicated. Let's take a very simple example. Imagine we have a strong bearish impulse. Then price starts moving upward. From a conventional perspective, we would call this a pullback. And that's correct. At that moment, it is a pullback. But here's the problem. How do we know whether that pullback will actually end and the bearish impulse will continue? We don't. We only know that the bearish impulse has continued after the market actually produces a lower low. But by then, we are already late. And this is where the problem becomes interesting. Let's look at what actually happened on the WTI 1-hour chart. From the highest point on June 30th, 2026, WTI experienced a strong bearish impulse. Price moved from around 71.60 down to $67.04 on July 2nd. That's a decline of approximately 6.37%. Then from that low, buyers started moving upward. The buyers' movement retraced almost 50% of the previous bearish impulse. Price reached around $69.26 on July 3rd, and then a strong bearish engulfing appeared. Now this is where many traders might think, the pullback is over. Sellers are taking control again. The bearish impulse is about to continue. And technically, that interpretation makes sense. The upward movement was a pullback. The bearish engulfing appeared, and price did move downward afterward. But here's what happened next. The bearish movement only reached around $67.82 on July 6th, and then it failed to continue the bearish impulse. Price did not produce a lower low. Instead, buyers regained control. And that movement that many traders initially considered to be just a pullback continued developing into a strong bullish impulse. Buyers repeatedly produced higher highs. And by July 22nd, 2026, WTI had reached around $88.61. Think about that. The movement that initially looked like a pullback turned out to be the beginning of a major bullish reversal. From the 67.82's area where the bearish continuation failed, price eventually moved to $88.61. That's an increase of approximately 30.67%. And from the original low at 67.04, the move to 88.61 represented approximately 32.18%. Now imagine a trader who understood the structure of the buyer's movement early. Let's say that trader bought WTI at $67.56, and the invalidation level was at $67.04. The risk was only 52 cents. Now the bearish engulfing appeared. Most traders might think the pullback is over. Some might exit their long position. Some might even enter short. But this trader does nothing. Why? Because he is not looking at the bearish engulfing in isolation. He has already observed the structure of the buyer's movement. He has already considered the possibility that this so-called pullback may actually be developing into the first bullish impulse against the previous bearish impulse. So the bearish engulfing becomes another event to observe, not an automatic signal to sell. The trader simply follows what happens next. Price moves down, but sellers fail to produce a lower low. The bearish continuation fails, and buyers regain control. So the trader continues to hold the position. He doesn't need to predict every candle. He doesn't need to know exactly what will happen next. He simply manages the hypothesis. If price reaches the invalidation level, the hypothesis is wrong. That's the risk he accepted. But if the hypothesis is correct, he allows the market to continue. And this position is eventually closed around 86.90s on July 22nd. From $67.56 to $86.90, that's a potential gain of approximately 28.64%. And with a risk of only 52 cents per unit, the potential reward was approximately 37.2 times the initial risk. Approximately 1 to 37 risk to reward. Now think about what just happened. If you exited your long at the bearish engulfing, you lost the opportunity. If you entered short, you may have lost again. And the most important question is, could we have seen this possibility earlier? This is where I believe most traders miss something. Yes, the upward movement after a bearish impulse is a pullback. That's true, but Fractal Authority Model does not teach us to apply that concept blindly. We have to look at both sides, because a pullback is not only a pullback. A pullback can also become the beginning of an impulse in the opposite direction. So instead of asking only, is this a pullback? We ask, what is the structure of this pullback? How large is it? How strong is it? How does it visually develop? What kind of structure is the buyer creating while supposedly pulling back? Because if the structure of that pullback is becoming large, strong, and structurally bullish, then we have to consider another hypothesis. Maybe this is no longer just a correction. Maybe this is the first bullish impulse against the previous bearish impulse. And this changes how we interpret what happens next. So when the bearish engulfing appears, we don't automatically assume, great, the bearish impulse is going to continue. Instead, we ask, does the structure that just appeared actually have enough authority to reverse the entire movement that came before it? If our observation shows that the buyer's pullback has already developed the characteristics of a potential bullish impulse, then the bearish engulfing may only represent a temporary attempt by sellers to regain authority. In that situation, we don't necessarily follow the bearish engulfing into a short position. We observe, we follow the downward movement. We allow the market to show us whether sellers can actually continue. And if we are already in a long position, perhaps we move the stop loss to break even if the structure allows it. Or we simply leave the stop at the original invalidation level, because that is the risk we have consciously accepted. Our hypothesis may be wrong, and that's okay. The important thing is that we already know where we are wrong. But if the hypothesis is correct and the bearish continuation fails, then we have something very important. We have evidence. The seller attempted to regain authority but failed. The bearish engulfing appeared. The market moved down. But the bearish movement could not produce a lower low. And then buyers regained control. Now we can look back and reinterpret the entire movement. What initially looked like a pullback may have actually been the first bullish impulse against the previous bearish impulse. And this is where probability comes in. FAM is not about blindly labeling every movement. It is about looking at both possibilities. Possibility 1, this is a pullback. Seller regains authority. Bearish impulse continues. Possibility 2, this is a pullback, but the structure of the pullback has become strong enough to represent the beginning of a new bullish impulse. Seller attempts to regain authority, but fails, and the bullish impulse continues. The goal is not to wait until the lower low confirms that the bearish impulse has continued, because by then, the information is already obvious. The goal is to observe the structure early enough to recognize the possibility that what we call a pullback may actually be the beginning of something completely different. This is the part that I believe many traders don't really understand. The market doesn't tell you immediately what a movement is. You have to observe it. You have to measure it. You have to compare its structure with the structure that came before it. And you have to maintain more than one hypothesis. That's why in FAM, we don't simply ask, is this a pullback? We ask, based on the structure that has developed so far, is this pullback still behaving like a correction, or is it becoming a potential impulse in the opposite direction? That distinction can completely change how you manage a position. And this is exactly the kind of situation I observed on the WTI chart. The market appeared to be forming a pullback after a strong bearish impulse. Then a strong bearish engulfing appeared. The obvious interpretation was that sellers were going to continue the bearish impulse. But when we look deeper, the structure of the buyer's movement was telling us something different. The pullback itself had already developed into something that had the potential to become a bullish impulse. So the bearish engulfing was not automatically a signal to sell. It was another event that needed to be observed within the larger structure. And when the bearish continuation failed, the market revealed what had actually been happening. The pullback was becoming the first bullish impulse. This is why FAM is not about memorizing patterns. It is about understanding the structure behind the pattern. It is about understanding authority. And most importantly, it is about being early enough to recognize what the market might become before it becomes obvious to everyone. Now, I want you to look at the WTI 1-hour chart yourself. Don't just take my interpretation. Go and study the chart. Observe the bearish impulse. Observe the buyer's movement. Observe the bearish engulfing. Observe what happened after the bearish continuation failed. And then ask yourself, what was actually happening here? If you find something important in that chart, something that perhaps you didn't notice before, share your thoughts in the comments. I'm genuinely curious to see what you find. And if you want to continue exploring this way of thinking about the market, subscribe to Bias Positive Digital Rise. Let's learn to observe deeper. Let's question what we think we already know. And let's build this community together.